Let me take you to the ENCA Money Desk now, and Devin Murugan joining me. So, Devin, we are in uncharted terrain, and everyone is looking everywhere for solutions, and the banks are doing exactly the same. Let me tell you now, I think Standard Bank was asked a straightforward answer. They gave a straightforward question. They gave a straightforward answer that they will be giving a payment holiday for 3 months for their business loan holders and students. The other banks, I think they're still trying to navigate this terrain.
Yeah, and remember, what's also important is that policy also keeps banks from getting together, competition policy. And I think there was the Banking Association just complaining about the fact that, policy has to move forward so that they don't do anything illegal. Nevertheless, the stress relief has to come. And as you said, South African banks are rallying together to offer some reprieve to their customers during the coronavirus outbreak. The economic and financial impacts are already being felt as downtime kicks in on many factory floors. So loan repayments will indeed be affected. Some banks have already outlined how they will assist. Let's start with Standard Bank. Yesterday afternoon, making an announcement on its approach. There'll be a 90-day reprieve period that will kick in for small businesses and students. However, during that period, interest and fees on the loan amounts will still be charged, but not for students, just for small business. Let's take a listen to what they say.
So there's two different treatments. For students, we have decided to not add the interest. So Standard Bank will bear the cost of interest and fees. But for small businesses, the interest will continue to be charged on the account, as well as any necessary fees. And then at the end of the period of the payment holiday, then a new installment will be calculated. The most important thing here is that while it's an offer that we wish to apply to all our customers, any client is entitled to opt out.
So that was Standard Bank, and then there's Nedbank. Now, let's just take a quick look to see what Nedbank's been telling us. Their proposal's coming in today. It says the support could include deferring payments or part thereof for a suitable period, extending existing loans or existing loan periods, I beg your pardon, and extending additional credit to manage short-term cash flows. That's the word from Nedbank. And then, of course, FNB also coming out saying that they will approach the details or give forward the details of their approach very soon. But they are saying that they are committed to help small businesses and individual customers. As I said, no real details coming out from them. And then ABSA also reaching out to ENCA today, saying that it wants distressed clients to approach the bank with their individual challenges. And as I said, that's according to a statement given to ENCA. Of course, we still wait to hear what Capitec has in store. But that's the bank response to this.
All right, so, Devin, we keep thinking about the impact on the back end of the COVID-19 outbreak in terms of our economy, but some of it we're already feeling right now. I see that part of what we do export as a country, vehicles, sales are down globally.
Yeah, globally. That's according to S&P. I mean, South Africa manufactures vehicles, and it's so much part of our economy. So S&P now telling us that global light vehicle sales are expected to slump 15% due to the coronavirus pandemic and lower growth. And you can see that chart. That's the forecast from S&P Global. The analytics group says that government's moves to provide stimulus packages will only partially address pressures on automakers. It says global light vehicle sales will probably drop to less than 80 million units. That's in 2020. That's a 15% drop on what we saw last year, 90.3 million vehicles sold. And that pretty much gives you a picture as to the global front. But the global slump in the car sales is bound to have an impact on local manufacturing. Vehicle manufacturing is the largest manufacturing sector in the economy and contributes about 7% to GDP growth in South Africa. Now, Michael Mabasa is the Chief Executive Officer of Vehicle Manufacturing Association, NAMSA. I hope you can hear me, Michael. Good afternoon to you. So this 15% slump globally, how much of an effect will this have on the country's vehicle manufacturing sector? Are you worried?
We're definitely worried. It's South Africa, particularly because vehicle manufacturing is very important to our economy. As you know, we're hosting in South Africa 7 global brands that are manufacturing vehicles in this country. Last year alone, 64% of what we produced in South Africa went out of the country as exports. So it's a very, very big business for us, and we are certainly concerned because the issue is not only affecting South Africa, but certainly the entire world, because we're currently exporting vehicles that we are producing in South Africa to around 155 different countries around the world. And many of those countries are actually in Europe. And what we are beginning to see in terms of what's happening with the coronavirus and also the things that are happening, particularly in that continent, definitely makes us very, very worried.
Now, Trade and Industry Minister Ibrahim Patel saying yesterday government is evaluating those export destinations. This was after a meeting with the President, business and different stakeholders on our response to the virus. He says that they're evaluating those export destinations. What are those prime export destinations looking like as far as the evaluation is concerned? Have you got any word on that?
Well, look, we are meeting with the minister this afternoon at 5 o'clock as the industry. All the CEOs of the automakers in the country will be in conversation with Minister Patel at 5 o'clock. And the main purpose of that meeting, amongst other things, is to really be able to look at those issues. Currently, we are making an assessment from each of the manufacturers so that we can be able to brief government on what is happening globally and how that will impact on South Africa in particular, but certainly also to give the minister an opportunity to can share with us some of the measures that the South African government is putting in place. Because you'd remember that the president on the 15th of March did indicate that the government is working on a stimulus package that will be assisting particularly industries that may be in distress and may have to readjust the operating procedures as a result of what is currently happening. So we really look forward to that meeting with the minister this afternoon.
Yeah, just a very quick one. I've got a few seconds here. I mean, you employ 100,000 people. Downtime plans on your factory floors, what it's looking like at the moment?
Currently, BMW has closed down. Ford has also made an announcement to shut down. And we anticipate that, obviously, other manufacturers out of the 7, so 2 is already shut down. We are looking and watching the other 5 very carefully in terms of what the announcements they will be making. And we will obviously be meeting with Labour and other stakeholders so that we can see how best we can manage those dynamics around the shutdowns.
All right, Michael Mabasa, NAMSA CEO, thanks very much indeed for talking to us. Let's whisk over to the markets now. And again, starting the week deep in the red for the JSE as the coronavirus continues to spread across the US and Europe. The rand, you heard earlier, has reached some of its lowest levels against the US dollar. In fact, at one point today, just 4 cents short of its lowest level. Let's take a look at the local market and the currency. So with the rand at 17.77 and the oil price $25 a barrel, never thought you'll see that a few moments ago.
It's grim. Both the diagnosis and the prognosis, it's just grim. I'm a silver lining kind of guy, Devin. Yep. Always looking for the silver lining, but I've given up.
Difficult to do that in these times.
Yeah. All right, Devin Murugan, watching All Things Money for us this afternoon.